Hi, good week to all. Welcome to this week of weekly technical outlook on the major stock indices. As usual, I'll be covering the latest key levels, the trend buyers to watch on the SPX 500, the Nasdaq 100, the Hong Kong 50, the Japan 225, and the German 30 index for this coming week of 19th of April to 23rd of April 2021. So before we start, let's take a look at the disclaimer slides first. All right. So first, to start up, let's take a look at the raw momentum performance on the major stock indices across the globe, from US, Asia to Europe. So let me touch on with the US major indices first. So as you could see, the S&P 500, the Nasdaq 100, the Dow Jones Industrial Average, all has been performing fairly pretty solid. Last week performance 1.36% on the S&P versus its prior week 2.71%, slightly below but above its prior 4-week average at 116%. And one thing to take a note over here is the performance of the Nasdaq 100, which is the top performer of last week at 1.42%, seems to be recovering from the previous 1 month plus or so of underperformance, slightly below its prior 4-week average of 1.73% and below its previous week at 3.86%. So it's pretty normal after a strong, I would say that upside surge in its prior week. And one thing to take note over here is the Russell 2000, which is the small cap stock. It has been underperforming in the last 8 weeks or so. They're about 0.86% positive for last week, but still below its weekly the prior week performance at negative 0.46 and its prior 4 week average at negative 1.17%. And one thing positive to take a look at will be the Hang Seng Index. So as we all know that the Hang Seng Index has been in a short-term downtrend since the start of the Lunar New Year break, which is around 18th of February. It's been trading in the short-term downtrend. Number one, actually basically there's two catalysts that is actually causing this short-term downtrend on the Hang Seng Index is due to the Chinese government pretty strong rhetoric to actually contain the recent upside move on the China related stock market, which actually impact Hang Seng, as we know that Hang Seng Index comprises a lot of significant China related stocks that is listed in Hong Kong. Okay, then on the second, on the hand, it will be the China big tech, where the Chinese government has been pretty much strong to actually curb their monopoly practices and especially their fintech business arm to actually control rampant consumer lending. So, but in terms of the momentum readings, as I see from the Hang Seng Index, it seems to me that more or less the worst of this short-term downtrend potentially is more or less over. Later, I'll share the chart of Hang Seng Index as well. Yes, last week it managed to stage a positive performance that was not seen in the previous 4 weeks or so, 0.94% above its prior week negative 0.83%, and most importantly managed to surge past its prior 4-week average at negative 0.2%. So one thing also positive on the Hang Seng Tech Index. Yes, even though it actually recorded a negative weekly performance last week at negative 0.89%, but at least this negative number seems to be more or less muted compared to the previous week at negative 3%. So for Nikkei 225, it's still pretty much sideways, if you could see as its raw momentum performance number. Weekly performance at less than 0.5% at negative 0.28%, uh, almost the same as its prior week performance at negative 0.929%, and if you take it into account of the prior 4-week average is at negative 0.05%. So we could see is that since its 52-week high that was recorded in the early part of February this year, it has been trading in a kind of a pretty much a sideways range. All right, then the top performer will be definitely be German DAX, as we are highlighted last week. It came in our expectation 1.48%. Number one is due to this cyclical and value play that the German DAX has been enjoying since the start of this year. 1.48% last week, above its weekly prior week performance at 0.84% and also above the prior 4-week average at 1.24%. So now let's take a look at the S&P sectors. Okay, so what I do is that I will dissect, S&P is it consists of 11 sectors. I will dissect these 11 sectors for your a quick snapshot picture. So this is the year to date performance. That means start of the year until last Friday. So despite, right, we know that the energy sector or the energy stock has been coming down or underperformed in the last 4 weeks or so. But in fact, if we compare since the start of the year till last Friday, they are still the top performing sector, up 27.6%. Okay, more than the double than the S&P 500 index year to date number of 11.4%. So if you look at it, the top three, right, are your cyclical and value play: energy, financials, industrial, then going by materials. So the one that is growth, right, technology is still kind of underperformed year to date at plus 9.86%. All right. So this coming week is pretty interesting for the energy sector. Why? Okay. So these are the key company earning announcement. As you all know that the U.S. Stock market has really kickstart its Q1 earning announcement last week, starting with the major banks. So for this week itself, these are the key corporates that I like to highlight for this week earnings release Q1 numbers. So why would I say that is this week is a big week for the energy sector? Because of the three major energy related stocks that are reporting. Baker Hughes will be on Wednesday before the market open. Halliburton on Wednesday as well before the market open, and followed by Schellenberg, which is on Friday before the market open. And do take a close watch on Intel, which is one of the major chip makers. We would like to see what is the forward guidance on the following quarter, given that we're now facing this kind of semiconductor chip crunch globally. So that will come in at its Q1 release will come in at Thursday after the market close. All right. So now good. Let's take a look. Let's now focus now on the technical charts on the various major stock indices that I want to highlight for this week. Okay, so let me switch to our CMC markets platform. So the one that I wanted to start with will be a proxy of global growth. To indicate whether there's a high demand of we call it global semiconductor chips. We could really take a look at the semiconductor ETF SOX in short. So this is a daily chart, okay, of this SOX ETF. So overall, I pretty much no change. So if you look at the previous strong push up from the 100-day moving average, as well as the lower boundary of this major ascending channel that has been capping this major uptrend intact since 18th of March last year. Strong bounce from here. So the whole of, since 5th of April, right, last week it started to trade the kind of a very congested, a very tight sideways range formation. So we could actually see this as a bullish flag formation. So overall, there is still no sign of a major distribution. That means, i.e., there's no potential sign to say that this whole uptrend is about to end. That means about to reverse to the downside. Medium term trend also remains intact since the low of 28th of October 2020 low. Daily RSI still remains positive, holding above the 50 level mark, and as well as this ascending trend line support as well, since the bounce of this major support at this 37 level. So all in all, right, no major kind of a distribution yet on the semiconductor stocks index. Medium term uptrend remains intact, holding above the key support level at 39250. I'm still looking for a further potential push up to actually target the top of this ascending channel at 495. We also correspond to the 1.23% Fibonacci expansion level as well. All right, so still potentially bullish on the semiconductor stocks index, which means, i.e., global economic growth still remains on a solid footing, which should support potentially, at least in the major to medium term, bullish trend that is still forming on the major stock indices in general. So now let me touch on the first index will be the SPX 500. So going to the daily chart, no change. Higher high, higher low, no topish signal to actually indicate that the medium term uptrend has already it's been damaged. RSI still at the overbought level, but there is no signs of a bearish divergence. What I mean by bearish divergence, if you could share with your, if you look at this high versus this eye, he's still shipping a higher high on the RSI, uh, no lower high. That means despite it's hitting at the overbought zone, it can remain in the overbought zone for a period of time without any bearish divergences. All right. So the extreme level so far since the last 3 months will be at 81%, which is the high that was recorded in September 2020. So still a bit of room more to push up towards this current 3 month of high of extreme overbought level at the 81 level. So all in all, right, we are still seeing further we call it pardon me, this medium term uptrend still remains intact on this SPX 500 index with the next resistance at 4300 followed by 4450. So now moving on to the strategy chart, which is the 4-hour chart for this week. So all in all, what we do over here is that last week we have a first resistance or target at 4200 slash 4220. So give or take is almost coming to reach that level based on last Friday's high. Okay, last Friday high over here, which is at 4191. All right, so 9 more points to hit for 200. So what I do over here is I will tighten the key short term, pardon me, the key medium term pivotal support for this week at 4060. So as long as 4060 is being maintained, not broken down on the downside. So what's 4050 is actually the lower boundary of this short-term ascending channel that is in place since 5th of March 2021, and as well as the 38.2% Fibo retracement taking from the previous swing low of 25th of March all the way up to last Friday's all-time high. All right, so I'm looking at 4060, the Titan key medium pivotal support. As long as this level holds, we should start to see a further potential up move to actually break above 4220 to actually break above 4200 4220 level to take us up potentially higher to the next resistance at 4280 slash 4300 resistance level on the SPX 500. Now, moving on to the Nasdaq 100, which is the proxy of this big tech stock that consists of Apple, Amazon, Google, Facebook, and so if you were to look at recap that last week we have a neutral stance below 4030, which is a key Fibonacci expansion level that I defined much earlier. So last week it actually kind of a hesitant, in fact, it has hesitant to break above 4030 indeed since 13th of April, the start of last week. Okay, it pretty much hesitant. Last week it closed at 40. Okay, the close of last Friday close, if I were to highlight for you, is at 4034 level. All right, so if I were to take a closer look at its other key technical elements, especially on the momentum index as depicted by the daily RSI, you could see that this daily RSI right now is breaking above, it has already broken above a key corresponding descending resistance that is in place since 1st of September. Okay, broken above it, hasn't really hit the overbought level yet. So what we could see is that what it implies by this daily RSI, it means that the medium term momentum, or I would say upside momentum, has started to actually resurface for the Nasdaq 100. It means, i.e., in terms of probability now, there is a higher chance for the 4030 level to actually be taken out on the upside. So with this positive technical elements that has already emerged on the daily RSI, I would be more confident right now to actually flip to a bullish stance on the Nasdaq 100. Okay, so this is the 4-hour chart. So what we'll do over here is if I could actually share with you all the latest technical element on the 25th of March 2020 low, it has now started to actually evolve into this short-term ascending channel, pardon me, as well. All right, from 25th of March 2021 low. Prior to that, we have an inverse head and shoulder bullish breakout. So what we could see over here is that I will actually use 13540 as my key medium-term pivotal support level, which is the lower boundary of this short-term ascending channel, and as well as if I draw the Fibo retracement, it's also the 38.2% retracement as well, taken from this short-term swing low from 25th of March 2021 low to last Friday high. All right, you see that 38.2% retracement. So what we do for this week is to be bullish. holding above 13,540. So as long as this 13,540 key medium term pivotal support holds, I'm expecting a potential bullish breakout above 1430 to actually open up scope for further potential up move to actually test the next resistance at 14,435 slash 14,460, which is defined by the upper boundary of this short-term ascending channel from 25th March 21 low, as well as the Fibo expansion target of 76.4% level. Okay, then also this inverse head and shoulder bullish breakout expected projected upside target as well, which is coming close to this 14,435 slash 14,460. All right, so now moving on to the Asia index, which is the Hong Kong 50. So if you look at the Hong Kong 50 over here, is that wow, pretty much positive since the start of this week. So it already broken up this trigger level, which is 29,170, which is this bullish inverse head and shoulder formation that has already started to form since 9th of May 21 low. So with that, right, what I will do over here is I will actually use 28,000 as my key medium term pivotal support level, looking for a further potential push up to actually test this next resistance at 30,140, followed by this 18th of Feb swing high area at 13,760, which is also the expected or potential exit potential of this bullish inverse head and shoulder formation, as well as a key Fibo expansion level taken from the low of 25th of March 21 low, project it to the high of 7th April, then project to the last swing low as 12th of April is coming in at 1.382% and 1.618%. 1.618 level. So with that turning bullish, okay, pardon me, maintaining the bullish stance on the Hong Kong 50 index, given this we call it several key positive elements that has started to emerge in this Hong Kong 50 index. So but nevertheless, if we start to see a daily close below 2800 level, 28,000 level, we would actually invalidate this bullish breakout or bullish scenario to see another choppy decline to retest the 25th March 21 low at 27,500. Then thereafter, back towards this pullback support, which is the former descending resistance from 28 from Jan 2018 high, now acting as a support at 26,650. All right, now moving on to the next Asia index that I would like to share with you will be this Japan 225 or Nikkei 225 we call it in our platform. All right, so since its 30-year high that was printed on this 16th of Feb, which is at 30,716 level, this is a 30-year plus high, it has been trading in a kind of a sideways configuration. We call it a symmetrical triangle, close to about that was 16th February. So now it's already 19th of April. So that's about, give or take, is about around close to 2 months plus or 8 weeks plus of sideways configuration. So, but what's interesting over here is that it managed to help above the 50-day moving average since the low of 31st of March. Okay, so even last whole week of sideways movement managed to help above this 50-day moving average as well, which implies to us that it's pretty positive right now that price action has managed to hold above the 50-day moving average since 31st of March, which is close to about 4 weeks or 6 weeks plus of price movement already. So I would say that perhaps we could see a bit of potential, we call it upside momentum that is coming into support this Nikkei 225 or Japan 225 price action. So now moving on to the strategy chart, which is the 4-hour chart. So what we could see over here is that perhaps right, last week price price movement is more or less started to actually coming and I would say potentially end this symmetrical triangle range configuration that is in place since 16 Feb 2021 high. So with that, right, I will actually be more confident to actually play a bullish bias right now, given that the price action managed to help close to more than 4 weeks or 6 weeks or so above the 50-day moving average since 31st of March, which I highlighted earlier on the daily chart. Okay, so definitely using 28,300, which is the lower boundary of this symmetrical range, as my key medium-term pivotal support for this week. Looking for a potential breakout. So it got to break above the 30,023.30 level, at least a 4-hour close above 30,023.30 level, which is the triangle resistance, to see a further potential breakout or play or further potential up move to actually retest 30,750, which is the 16th of Feb high. Then thereafter, looking for further potential push up to actually test the next resistance at 31,350, which is the one-time Fibo expansion taking from the low of 29 Jan 2021 low towards 16th of Feb high, projected to 24th of March 2021 low. All right, so that gives us 31,350 level. So with that signs of a positive price action that is emerging on the Japan 225, I'll be more confident to actually turn positive or turn bullish this week from last week neutrality stance. All right, now moving on to the strongest performer, which is the German 30 index. So as you could see, the German 30 index last week almost hit our first resistance target at 15,530 level. Still no signs of exhaustion yet in terms of the major uptrend that is taking shape since 19th of March 2020 low, and also the medium-term uptrend in place since 30th October 2020 low. No signs of distribution. RSI, yes, is at the overbought level, but if you look at the RSI, like I say again, it can be persistent at the overbought level for a period of time. And also what's positive is that the RSI still continue to trace higher high in line with the higher high in price action of the index. So this is what I call that no signs of bearish divergence. I mean, i.e., the medium-term upside momentum still remains intact. So in the last, we'll call it the previous extreme overbought level that is in shape close to 2 years, 3 years plus back, which is 3rd of November 2017, is at the 86% level. All right, for the German 30 index. So still got a bit of room more to push up before hitting this 86% level, extreme overbought level that was seen in November 2017. Okay, so with that, for this week's strategy, what I do is that since it's coming pretty close to the first potential target of resistance that we highlighted earlier on at 15,530 slash 15,580, I will actually tighten the key medium-term pivotal support for this week at 15,070. So I'll actually tighten up to 15,070. So what's 15,070 is in fact the very short-term ascending trend line that is in place since 26th of Feb 2021 low. All right, and also a Fibo retracement level. Okay, let me highlight to you all. Take it from the low all the way up to last week high. Is at 23.6%. 23.6% Fibo retracement as well. So still looking for a further potential upside to actually test or target the next resistance at 16,070, which actually defined by a confluence of cluster of Fibo expansion level. All right, so all in all, right, if we could let me take you all through again to recap. So all in all, there's the major uptrend of all the major stock indices from March last year low still remains intact. Their medium-term uptrend from October 2020 low also remains intact. No clear signs of distribution yet in both in terms of a major time frame perspective. We talk about multi-month, and a medium-term perspective, which is multi-week. So all in all, medium-term uptrend remains intact. So I will actually maintain my bullish biasness for the major indices that I covered earlier on. Turning bullish for my neutrality stance earlier will be the Nasdaq 100, followed by the Japan 225. Okay, then I will actually tighten the key medium-term pivotal support for the German 30 index as well as the S&P 500 index. So with that, thank you for your time. Have a great trading week ahead, and I see you all next in my next video.